Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a fantastic weekend. We're going to kick off with a quick review of key events coming up next week, and we have FOMC, so we cannot create a trading plan going into next week without taking into account FOMC out of the US on the 26th next week. We're then going to look at the scorecards for the currencies going into next week. And last week we had New Zealand CAD to the downside highlighted as the best currency pair, and that was a fantastic market if you shorted that last week. And that actually takes us to 3 out of 3 for the first 3 weeks of the year in terms of the performance of the best currency pair highlighted in the scorecards. We're then going to look at the currencies individually in the futures markets before moving on to the Forex pairs, and we're going to look at the best Forex pairs either to the long side or the short side heading into next week, which offer us the highest probability to make money next week. And once we've done that, we're going to finish as we always do with stocks, gold, silver and Bitcoin. And we did see a big shift in the stock market, which we're going to cover at the end of the video. So with that said, let's get into today's video. So if we have a quick review of the economic calendar for upcoming events, because we can't create a trading plan without knowing what events are coming up in the next week or so, you can see there's lots of data. We're not interested in going through all the pieces of data because most of these are irrelevant for short-term trading. However, there is a very important piece of data coming out next week or an event, which is the FOMC interest rate decision out of the US on Wednesday. And at the same time, or just earlier, slightly earlier, a few hours earlier, we have the BOC, the Bank of Canada, also with an interest rate decision. So the Canadian dollar and the US dollar, and probably all of the markets because of the global reserve status of the US dollar, are going to correct, move sideways, and really do nothing in all probability between Monday and Wednesday. So the first thing to note is if that's the case, it's not a great idea to go into the days before FOMC taking lots and lots of trades, because most of the time the markets will be choppy, and when you've got choppy markets, really you have, generally speaking, a lack of opportunities. So in terms of my own Forex trading plan heading into this week, whereas usually I would be very reliant on the scorecards to be predictive in the sense of showing what the best pairs are for the upcoming week, because of the market moving nature of the Federal Reserve and of FOMC, it has the ability to change up the scorecard. So yes, the scorecards are still important because they show us lots of information and they're going to be giving us a general idea of what's going on. And in fact, when we look at New Zealand, there's a very interesting score for New Zealand, which we're going to look at, and we can discuss what that might mean for the markets in general. But with FOMC week, we really want to try and shift into a more reactive instead of predictive mode, in the sense that we're going to be looking at US dollar setups and pairs which can be traded both ways. So if we get a hawkish response from the Fed and we see the dollar rallying or we see the dollar strengthening, there will be US dollar markets we can trade in that direction. And we're also going to be looking at setups in the other direction. So if for whatever reason the Fed came out with a more dovish tone and we saw the dollar selling off, there are also markets and setups with the US dollar which we can trade to the short side. So that's really the first thing to note going into this week, which is that between Monday and Wednesday, the markets are likely to be corrective, and a shift to a more reactive approach based on the outcome of FOMC and a little patience in the days prior to it is going to be the best way to approach next week, in my opinion. You can see we also have some CPI data, but really the overriding theme next week is going to be this FOMC meeting on Wednesday. If we go to the following week, very quickly, you can see we also have more interest rate decisions out of Australia. We also have an interest rate decision out of the UK on February the 3rd. And we also have an interest rate decision out of the EU. And then that Friday, we have non-farm payroll. So there's a lot of data coming up in the next 2 weeks. And unlike the previous 3 weeks, where we pretty much had a clear run in the markets without any real market moving events, the next 2 weeks is likely to see some volatility and is going to require some careful planning to navigate. So let's have a look at the scorecards heading into next week. And you can see last week, this was the New Zealand CAD score, which was highlighted last week as the best market to play, which is New Zealand CAD to the downside because New Zealand was the weakest and the CAD was highlighted as the strongest. And that was a great short last week. In fact, the CAD pairs overall, which were highlighted as the best long plays, performed really nicely. The pound pairs slightly underperformed. Against the New Zealand, they wasn't too bad. We had pound New Zealand closing strong. Against the yen and the dollar, which were neutral currency, so a strong versus a neutral currency, it didn't perform so well. And this really goes to show as well why sticking to the best scored currency pairs is going to give you the highest probability of making money. And when you start to get into the strong versus neutral or weak versus neutral, you do have a higher risk of reversals. That's why I highlighted the CAD pairs as a priority over the pound pairs last week. But you can see heading into this week, the change was we saw the US dollar gaining, we saw the Swiss franc gaining, the yen gaining, and we saw the New Zealand with a score of -2 or a net change of -2, giving us an overall score of -4. Now we know when we get to the -4 or the +4, this usually signals an impending reversal in that market. The market has become a bit overstretched. It doesn't necessarily mean straight away, but over the next few weeks usually it means. So anybody who had long-term positions in the New Zealand dollar, this is telling us we don't want to go long because it's still very weak, but this is telling you it is a good time over the next week or so to start to book in some profits on those New Zealand short positions if you've been holding them for a number of weeks. And we've been shorting the New Zealand dollar for a number of weeks. So just looking at the net change and the momentum behind the currencies and the scores heading into FOMC, it's pretty clear what we're seeing here. We are seeing a flight to safety. We've seen the Japanese yen, the Swiss franc and the dollar increasing in strength, although across the board they're fairly neutral still. You can see +1 or -1 for people who follow this channel on a regular basis is kind of neutral. So the franc is bullish to neutral, the dollar's bullish to neutral, the yen's bullish to neutral, the Aussie's bearish to neutral, the euro's bearish to neutral, and the New Zealand is super bearish to the point where we're probably going to see some profit taking coming in and a reversal over the next few weeks. So the real takeaway here heading into FOMC is, first of all, these scorecards can change based on the outcome of FOMC. However, we are seeing a flight to safety pre-FOMC, and that money is coming out of the stock market. We saw a big sell-off in stocks, and we're seeing a flight to safety as the stock markets decline. And of course, we're going to be looking at the stock markets later on at the end of the video. So based on the scorecards, although they could change, I would prefer to look at risk off setups on the basis that more likely than not, we're going to continue to see a risk off environment. So when we look at the currency pairs themselves, I will be focused as a priority on risk off setups, which we will look at. However, just to be on the safe side, we're going to look at markets which involve US dollar weakness, which we can pivot to in the event that we get a more dovish Fed. Now, why might we get a more dovish Fed coming out on Wednesday? Well, they may be looking at the stock market and they may be looking at the sell-off in the stock market. And looking at the stock market, they're going to feel pressure to come out and give a somewhat softer rhetoric, which is going to be more supportive of stocks. So whether they act on that pressure and they come out with a more dovish tone on Wednesday remains to be seen. But of course, they're stuck between a rock and a hard place, because the more dovish they get in order to support economic growth and the stock market, they also run the risk of exacerbating the inflationary situation, which they're trying to control. So if you have a look at the individual currencies, starting with the DXY, you can see the US dollar has been correcting from the highs, and from the low over here, we've also been correcting. So there is no real clear direction in the DXY. We are currently bearish on this correction, technically speaking. However, when you look at this in the bigger picture, this, as it stands, looks like a correction in an overall uptrend here, and this looks more like a bull flag. And I do think we come up and take out the previous high at some point, and especially if the risk-off environment is to continue, we will be seeing highs in the dollar, and that may be catalyzed from FOMC on Wednesday. So the scorecards show us a kind of bullish to neutral, and the technicals show us a somewhat bearish to neutral. So the dollar is neutral heading into FOMC, and that is unlikely to change until FOMC takes place and we get the next directional move in the dollar. Next is the euro. Now the euro is essentially just the opposite of what we discussed here. You can see we are technically bullish. You would say this is technically bullish to neutral. And when we look at the scorecards, it's bearish to neutral. So again, this is just a neutral currency. We've been correcting here, moving sideways, a very choppy market really since the end of November. And again, this is unlikely to change until we have FOMC on Wednesday. And of course, this is really just the inverse of what we looked at in the DXY. It does look like we have a nice big momentum leg to the downside here, followed by a correction. And I do think most likely, looking at the technicals here, we come down, take out previous lows and continue this to the downside. And that, of course, would fit in with a continuation of a risk-off environment, a deflationary environment. Next is the pound. So the pound is actually showing some strength here, and you can see this really confirms what we're seeing in the scorecards. We have a nice big rally and we have this correction. So I would be looking further advances to the upside in the pound overall, but just bear in mind this is also going to be affected by FOMC. But this would be the opportunity I'd be looking for in the pound pairs for further advances up to the 1.3829. At the very least, you can see this has been stronger than the euro, and this is just confirming what we looked at in the scorecards. Next is the Swiss franc. Now the Swiss franc has started to break high. You can see if we zoom out a bit, this was the big inverse head and shoulders which are highlighted, and a stronger franc does fit in with a more risk-off environment. And if we get the Fed coming out and failing to reassure markets and sticking with a more hawkish rhetoric, then we are likely to see, as I said, a continuation of the risk-off environment. We're going to see the Swiss franc continue higher. You can see here on a technical basis as well, we really have on the right shoulder here a big bull flag. We've had a correction and now we're starting to break out to the upside, and the next target is the 1.1100. So really confirming what we're looking at in the scorecards. The Japanese yen has been correcting off the lows here, and we're very close to reversing above the 0.088140. Again, like all of these currencies, it's really going to be affected by FOMC in all probability next week. But you can see we are getting some strength coming into the yen, and this would turn technically bullish on a break above this red level here. Next is the CAD. The CAD was the market highlighted last week. We did perform nicely, but we have somewhat reversed here. You can see we have a double top and we've broken the low down here. So technically speaking, the CAD is weakening and it looks like some profit taking coming in. So is the CAD going to continue to be strong going into this week? Well, again, we have the interest rate decision out of Canada. So I would really be looking to trade the CAD pairs in the same way as the dollar pairs. I would want to wait for that meeting to take place on Wednesday. And really, to be honest with you, after FOMC as well, before looking at the next move in the CAD pairs. Expect the CAD pairs to be neutral between Monday and Wednesday. With the Australian dollar, now the Australian dollar is the one that really interests me heading into next week in terms of the short side. You can see it's still technically structured to the upside, but that would change on a break below here. That would actually confirm a head and shoulders to the downside. And as a result, this would be the start of the next leg down. And this, because it's right at the point of reversing lower, it interests me the most to the short side because, as I said, it could be the start of a move down in Aussie. So going into next week, I do like the Aussie as my best short. I favor Aussie weakness. And if we come and break this low, look for a sell-off down towards the 0.70030 and a new low over here. This is the primary move to the downside, which I'm going to be focused on next week. And finally, we have the New Zealand dollar. The New Zealand dollar has been the weakest, and we are heading down to the 0.66620. Alongside the Aussie, the New Zealand is my second favorite short. The only reason it's my second favorite is because it looks like a chunk of the move has already taken place. We've already had those short opportunities in the New Zealand, whereas the Aussie hasn't really caught up yet, and it looks like the same opportunities we had in New Zealand to the downside are about to appear in the Aussie. So I do still like New Zealand shorts, but because it's so weak, or it's been so weak, I favor Aussie shorts over New Zealand shorts. Okay, so looking at the best markets heading into next week, I am going to this week start with all of the dollar pairs, and there's going to be setups to the upside and to the downside because, as I said, especially in terms of the dollar pairs, we want to try and be more reactive after FOMC takes place, trading in that direction rather than trying to be predictive because FOMC can change the scorecards. So the first market I like to the downside is Aussie dollar, and this would of course come if we get a more hawkish Fed and we start to see a strengthening of the dollar. In that scenario, I'd be looking for a break of this level here. This would initiate a new trend to the downside. This would be a head and shoulders reversal. And what I'd be looking for is if we come down and break this level and we get a hawkish Fed, any pullback in this market then would be viewed as an opportunity to start to look for further declines down to the 0.7007. As I said earlier on in the video, my base case is for further risk-off sentiment, and Aussie dollar to the downside would be a continuation of a risk-off environment. The next dollar pair I'm going to look at is New Zealand dollar. Now, this market, very similar to Aussie dollar, is going to be an opportunity I'm going to look at in the event of a stronger dollar or a more hawkish Fed. You can see we've already started to break out here, and any pullback in this market, say we start to break down Monday to Wednesday, we correct like this, and then on Wednesday we get the Fed coming out more hawkish or failing to reassure markets and we see the dollar rally. This breakdown lower would be the opportunity to look further declines down to the 0.6725. Now, as I said, the only reason I like Aussie dollar more is because the New Zealand dollar is scoring as so weak that in the next couple of weeks we may see some profit taking and a short-term reversal or bottom in the New Zealand dollar pairs. Next is euro dollar. Now, euro dollar, I've put this kind of a middleman. You can see you could trade this both directions. What I'd be looking for in euro dollar is the following. We are currently structured to the upside, So if, for whatever reason, we get the Fed coming out with a more dovish rhetoric, trying to support the stock market, and we see a weakening or a sell-off in the US dollar, that would coincide with a rally to the upside in euro dollar, and any pullback after that would be viewed as the opportunity to look for further advances into the previous high and then onto the 1.1513. If you like to trade euro dollar, I know some of you do just like to trade euro dollar all the time, what I'd be waiting for is either that to take place, or if we start to trade below the 1.1274, that would be where I would turn bearish on euro dollar, and that would be looking for a continuation of this move down. So it would come down, break the 1.12743, for example, and then any pullback after that would be viewed as an opportunity to look further declines into the 1.1188. So you can trade this either way. However, because we're currently structured to the upside, this for me is a market I would come to if we get a weak dollar or we see the dollar selling off because the Fed come out with dovish rhetoric to support the stock market. The next market is US dollar Swiss franc. Now US dollar Swiss franc, again, of course, would be the Fed coming out more supportive with dovish rhetoric, talking down the dollar, that is to say. And what I'd be looking for is any continuation in this market. Say we pull back Monday to Wednesday like this, and then we see a sell-off out of FOMC, that would be the opportunity to look further declines into the 0.9011. Next is pound dollar. Pound dollar is clearly structured to the upside, and this would be a market I would come to if we get a weakening of the dollar once again. So if we start to correct between Monday and Wednesday, and then on Wednesday we get a weakening of the dollar and we see a rally like this in pound dollar, that would be the opportunity post Wednesday's FOMC to look for a pullback into the previous highs over here and then onto the next key area of resistance, which is 1.3827. And the final US dollar weak pair that I'll be looking at is US dollar CAD. US dollar CAD has been selling off to the downside, and we are now kind of correcting. If the market continues to pull back and we get a dovish Fed, and what we see between Monday and Wednesday is the market doing this, and then on Wednesday we get a sell-off like this, I will be looking for a pullback and any opportunity to look further declines into the 1.24320. So to summarize the dollar pairs, my preference going into next week is for a continuation to the upside in the dollar, and I'll be looking for Aussie US dollar to the downside primarily, and then second New Zealand dollar. If that, as plan A, fails to materialize and we get the Fed coming out and trying to support the stock market and talking down the dollar, I will not be interested in looking at those pairs. I will instead look at euro dollar to the upside, US dollar franc to the downside, pound dollar to the upside, and US dollar CAD to the downside. So those four pairs there are based on dollar weakness, and the top two, the two I like the best, are based on dollar strength. So again, being reactive instead of predictive next week on the dollar pairs, prepared to try and play that in either direction if possible. The next market we're going to look at is crude oil. Now, crude oil did take out the target. This was a market highlighted as one of my top markets last week to look for opportunities in, and we did take out the target set. So crude oil to the upside was a good move last week, but you can see here we've traded into the previous high, and if we continue to see a risk-off environment, this is going to be negative for crude oil. So personally speaking, I would be wary of trading crude oil going into next week. It is still bullish, and you can see now the next target to the upside is the 88.75. But in my opinion, the best opportunity was last week, and I think we have a higher risk of reversing or correcting in crude oil based on a combination of trading into the previous high and seeing a risk-off environment taking hold. Even in the stock market, we're seeing defensives gaining against cyclicals, and we're also seeing XLE potentially peaking in the stock market as well. So I would leave crude oil for next week, and it has no relevance to the CAD pairs because the CAD pairs are primarily going to be decided next week based on the BOC interest rate decision on Wednesday. Now, after the dollar pairs next week, I do like these risk-off setups in the following 5 Forex pairs. First of all is Aussie Yen. You can see Aussie Yen has actually failed to make a new high in this area, and in fact this marks a potential major double top in Aussie Yen. And we've started to break down. You can see here is the head and shoulders in Aussie Yen. This is the original head and shoulders which started this new leg to the downside. And since we're trending to the downside, we've broken out of this shallow correction here. I am going to be looking for any pullback next week in Aussie Yen, and any pullback in this market is going to be viewed as an opportunity to start to look for further declines and bearish reversals. down to the next key area of support to the downside and the target set at the 78.97. My fourth favorite market heading into next week is New Zealand yen. I've ranked this after Aussie for reasons discussed earlier. However, when you look at this market, you can see there is really nice momentum to the downside, and this is usually always indicative of further declines in this case. So any pullback in this market will be viewed as an opportunity to look for bearish reversals. First and foremost, down to this level here, you could argue that this is the next target down here, and then onto the next key area of support to the downside at the 74.83. This is highlighted as a high conviction target. So although the New Zealand is very weak, we may still have further to come in New Zealand yen. When we look at New Zealand franc and we had the high conviction targets, we started to take those out last week, even though they had been there for a couple of weeks. So New Zealand yen to the downside is one of my favorite markets heading into next week. Next is Euro yen. So the euro is also weak, and if we continue with a risk-off environment, the yen is going to be the biggest gainer. So any pullback in euro yen would be viewed as an opportunity to look for bearish reversals down to the next key area of support to the downside and the target set at the 127.31. I do prefer Aussie yen and New Zealand yen over euro yen, personally speaking. And the final two pairs here in the forex markets are Aussie franc. We have started to break to the downside. This is a big correction, which is now coming to an end, and it's coming to an end with head and shoulders reversal. We've now broken the low down here, and we've confirmed this pattern. And we're starting to get momentum as well. So any pullback in this market is simply viewed as an opportunity to look for bearish reversals down to the next key area of support to the downside and the target set at the 0.6416. And this kind of mirrors what we looked at, do you remember, in the Swiss franc? When we looked at the currency itself, we highlighted that big inverse head and shoulders, and we're sitting right at the right shoulder over here. And we're threatening to break up with a bull flag. So if that breaks higher, you're going to see this coming down. And I do really like Aussie franc to the downside. It's another deflationary or risk-off setup. And the final forex market here is New Zealand franc. This was a market highlighted to the downside, and I had some people asked me on Twitter, what should we do with New Zealand franc because it's getting very choppy, and I said I would still be shorting every rally. And we traded into the first high conviction target here of the 0.6140, although it wasn't on the list last week. But now we've had that sell-off, and you can see we've got this sell-off with momentum. So I do have another high conviction target. I think there is a very good chance we come down to the 0.60870. So any pullback in this market, and of course this is another deflationary risk-off setup, is going to be viewed as an opportunity to look for bearish breakouts and bearish patterns into the 0.6087. So to summarize these markets for you heading into next week, FOMC makes next week a big week. It makes next week a week for patience, and it's not a week, in my opinion, to start going and trading lots and lots of currency pairs, because the markets are unlikely to move between Monday and Wednesday, and then they're going to get very volatile from Wednesday, Thursday, Friday. So I have a reduced list here of forex pairs. Because of that, I'm not looking to trade lots of pairs going into next week. My primary plan is to be reactive to FOMC, either to the long side or to the short side, and based on that outcome, I'll be trading either Aussie US dollar and New Zealand US dollar if we get a stronger dollar, or euro dollar, US dollar, Swiss franc, pound dollar, and US dollar CAD I will pivot to if we get a weaker dollar and a more dovish Fed. Outside of the dollar interest rate decision setups, I favor Aussie yen, New Zealand yen to the downside in this risk-off environment, and I also favor Aussie franc and New Zealand franc to the downside. And this list right here represents the only forex markets I'm going to be paying attention to heading into next week. So wrapping up with stocks, gold, silver, and Bitcoin. And over the last few weeks, we've really seen the stock market kind of being choppy, kind of being corrective. Last week, I highlighted the fact that tech stocks, the Nasdaq, were bearish, and it was one of the markets which was actually structured to the downside, while all the other markets were still technically bullish, but they were correcting and they were close to reversing. Well, last week we had a reversal to the downside in a number of these markets, and you can see we came down with momentum. This is where we're getting the risk-off sentiment coming into the currency pairs that we discussed, and the sell-off in stocks is what's setting up some of those really nice risk-off setups like Aussie franc, like New Zealand franc, like Aussie yen, like New Zealand yen to the downside. And one of the reasons I really like those risk-off setups in the currency markets is even if the Fed comes out and tries to support the stock market somewhat, it would have to be almost a complete U-turn in order to send stocks from where they currently are back up to new all-time highs. I think that's unlikely. We may see a softening of the rhetoric start to support stocks somewhat, but a complete reversal and then back into a reflationary kind of environment seems very unlikely. And that's one of the reasons why I think this risk-off sentiment is likely to continue and why I'm looking to trade in the way that I am heading into next week. So very simply put, any pullback in stocks is currently viewed as an opportunity to look for further declines down to the next key support to the downside and the target set at the 4296.45. Next is the Nasdaq. Now, last week I highlighted that the Nasdaq was actually bearish, and you can see we did come down, take out the target set at the 15150.38. Heading into this week, I mean, we're coming down here with momentum, and yes, we have FOMC, but the Nasdaq is still bearish overall. So it looks like we may take out this target first. If we take out this target, any pullback in the Nasdaq is currently viewed as an opportunity to look for further declines to the downside, down towards the next key support to the downside at the 13956.80. Next is the Dow Jones. Now the Dow Jones has also reversed to the downside, and we're approaching the target of the 34019.29. Any pullback in the Dow Jones would be viewed, similar to the other stocks here, as an opportunity to look for further declines, bearish reversals down to the 34019.29. Next is the Russell. Now the Russell is a market which I highlighted previously. Although it was bullish, I did highlight the 2107.080 as a key area to look for. I said if this level, and this level's been on here for I don't even know how many videos, but it's been on here for quite a long time. And I said, if the Russell breaks the 2107, expect this to break with momentum and for this to be a warning sign that stocks in general are starting to reverse lower. And once we broke the 2107, that's exactly what we saw. We came down here with momentum, and the Russell is now bearish. That has started a trend to the downside. It's not a major trend. This is actually a counter trend. If you look at the bigger picture, you can see the major trend is still to the upside, but a new counter trend move has started, and we could be seeing further declines in the Russell over the next few weeks, if not longer. So very simply put, any pullback in the Russell as it currently stands is viewed as an opportunity to look for further declines to the downside, and we're going to be looking at any pullback down towards the next key of support at the 1932.62. And finally, we have the Nifty. Now, I did highlight the fact that the Nifty is currently still structured to the upside. It is bullish, but as you can see, although if you were to be long stocks, being long the Nifty would be a better idea than being long US stocks because it's likely to outperform. However, you can see it's not immune from what's happening in the US stock market. So yes, the Nifty is currently bullish, and any break higher should be viewed as an opportunity to look further advances into the 18594.90. But that breakout higher is unlikely to take place if we see continued selling off in the US indices, because as you can see from last week, this is going to have a knock-on effect on the Nifty. So overall, I would take a neutral stance on the Nifty, as it's going to struggle to break higher all the time US stocks are selling off as they are. Okay, so wrapping up the video with gold, silver and Bitcoin. Starting with gold, I covered this in the previous two videos. In fact, not last week, but the week before I covered it in quite a bit of detail. I spent 6 minutes talking about this out of about a 30-minute video. And I highlighted this retest of the broken double bottom reversal. And I noted that I was looking for a move into the 1842.97, and that move, I mean, that was exactly what took place. We actually finished the week pretty much right at that target. So that was a really nice move, an opportunity to take some profits if you wanted to. However, I did highlight something else, that although we took out the target last week, this was potentially the start of a major move to the upside. In gold, we are looking at a potential right shoulder here and a breakout of the right shoulder. And the real key breakout from last week was the high of this retest over here. And you can see once we broke above this level with momentum, which is suggestive of a much bigger breakout as well, we came back to retest it, and we're sitting right at this area now. This is the area where if there is going to be a big breakout, the market is going to rally higher. And it's also the area that if the market were to fail here for whatever reason, you could see some momentum to the downside, because you can see all the people who traded that breakout pulling their long positions. And of course, if you bought on the breakout long and you exit that position, you're selling that position. The fact that we're getting a sell-off in the stock market and the fact we're seeing a risk-off mentality taking over is actually somewhat supportive of gold. And actually, it tells us on balance that this risk-off mentality is likely to send the gold price higher, and it is actually going to help this breakout somewhat. So for anybody who's not already involved from gold, when we looked at the pullback down in this area at the 1793, any continued bull flag, really, to be honest with you, not breaking much below the previous high over here, any bull flag is going to be viewed next week as an opportunity to look for bullish breakouts. I'm going to be looking into the 1854.93 as a near-term target. But again, if you want to keep hold of gold, or you want to hold some of your long position in gold for a much bigger rally, which could be potentially coming, that is also on the card still, as well, as this breakout is still intact. Next is silver. Now, before we look at silver, I want to show you the gold-silver ratio. Gold had been outperforming silver up until last week. We had a huge sell-off in the gold-silver ratio, and this is now technically structured to the downside. We have a trend reversal to the downside in gold versus silver, and what this is saying is silver long positions somewhat look more attractive than gold, even though we have potentially a really nice breakout in gold. So going into next week, I'm absolutely bullish on silver, and you can see a really nice break with momentum is indicative of further advances in this market, so I do really like silver. Any pullback in silver is simply viewed, as it currently stands, as an opportunity to look for bullish reversals into the next key resistance, the upside, at the 25.37. And last but not least, we have Bitcoin. I have been bearish on Bitcoin, and we did take out both targets to the downside last week, first at the 39.63, and we have just taken out the second target at the 35.452. You can see in Bitcoin we broke down below this correction here with momentum. So what this is suggesting is there's going to be a correction, and then there's going to be further declines to the downside. I'm looking for further declines into the 32112.00. Now, the other thing with Bitcoin is if we are getting a risk-off environment taking over, this is negative for Bitcoin, because Bitcoin has been performing best when stocks are going up, when we have a reflationary type of environment. So don't get me wrong, I really like the concept of Bitcoin. However, the fact is the risk is weighted to the downside. So that is it for me for this week, guys. To summarize, we do have FOMC next week, so you need to be careful in the markets, because FOMC has the ability to move not just the Forex market, but the stock markets and other markets as well. I do favor risk-off setups, with my 6 favorite Forex pairs being Aussie dollar to the downside, New Zealand dollar to the downside, Aussie yen to the downside, Aussie franc to the downside, New Zealand franc to the downside, and New Zealand yen to the downside. I am also looking for further declines in stocks and Bitcoin. However, as it currently stands, it does look like we're going to get further rallies in both gold and silver. So as always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.